Good evening. Today is August 26th, 2019, approximately 10:10 Eastern Standard Time. My name is Olawale Okabola with Spartacus Trading Corporation, here to bring you the recap and prep report for the S&P E-mini futures contract. Let's jump right into the bar charts. This is the monthly bar chart. We're one time framing down on the monthly. Um, we're not above the halfway mark of August, so things are, at least on the monthly, is concerned, as a proxy of where we're trading in the range. We're still below the halfback of the month of August. On the weekly, this is where it gets fun, folks. We're in a 1, 2, 3, 4, 5 week balance area. This week closed back within that week. That makes it a 2 weeks. This week closed back within this, closed back within that. That makes it a 3 week, 2 week. On and on and on we go. What was important, I talked about it in my recap, my prep report video from this morning, because I didn't do a recap video. So anyway, in the prep report, I talked about that this is an inside. Last week was an inside week. We did not breach the high or the low. Typically, that is a go with trade, because more than likely there's stops up above and below. So, typically for me, I just go with the breakout from an inside bar, whether it's an inside day, inside week, inside month. Typically, the rules for that is all bets are off when you hit the opposite extreme. I was paying attention to the downside because we had weekly lows that were not far from each other, and more than likely we probably could trip those lows. As you can see from today, we did not. We actually traded higher. So what do we have? We have, well, today's only Monday, so it's not giving us much information. But what we have is an inside week within an inside week. So on a weekly basis, now this is a time frame longer than the day time frame. It's a breakout from either end of balance. You can imagine some stops are here. We know the market's short. You can imagine some stops down here because people are buying and pushing the market up. Okay, on to the daily bar. What do we have? We have an inside day on the daily. These are some of my favorite patterns to trade. I usually go with the breakout from the inside day. Again, all bets are off when you reach the opposite extreme. That's basically the end of the trade. All bets are off. So you want to pay attention to that. It's really a go with trade in either direction, depending on where the market wants to break out. As a lot of people out there believe that the market is short or oversold. That is true, but thank God we have the profile so we can look into the nuance of that analysis. So stand by. Today was a relatively simple day to trade, at least for me, because value was unchanged today. So I knew based on that, we more than likely would get rotation up and down. And in fact, that's what we got. No clear direction. We have a point of control that just sticks out like a sore thumb. Only at 1 TPO. It's 10 wide. Okay. Only at one tick. I'm sorry, 1 TPO. At one tick, at 10 wide. How often do you see that formation? Okay. So let's go back to the analysis that the market is short. I believe it is short, but it doesn't matter, right? Because, well, from this sell off, let's start from this Friday sell off. That range, uh, where's my notes? A 94 point range on 4 billion volume. That is really light, really light. What keeps the auction to the downside is this double distribution that held. If and I talked about it in my pre-market report, if the market could not close this double distribution, the auction is still down. Okay, but then we also had some overnight single prints. Let me bring the overnight in. We had some overnight single prints, basically saying that with more current information, we have a new auction to the upside. So it's like we're sandwiched, right? The market is sandwiched between this double distribution showing a new auction to the downside, and these overnight single prints showing a new auction to the upside. Okay, Now, here's the nuance. Today's rally, take off the overnight. Today's rally was made. Well, can we call it a rally? I guess we can because we closed outside of above value, right? Or we closed near the high, rather, not above value, but we closed near the high. I'll talk about closing above value soon. Uh, you can call it a rally, whatever you want to call it. The fact that the market's up, right? Up on light volume. Today's volume was only 3 billion uh, on the per the New York Stock Exchange, and the range is only 29 points, right? So that's really light volume once again to go 29 points and close near the highs. Okay, so we wouldn't be surprised if the market begins to trade higher because there's nothing really in the way because of the light volume. But likewise, there's nothing to stop the market from trading lower either. In addition, we have a daytime inventory imbalance because one, volume did not support the move up. Two, value, as you can see from my yellow border, value is unchanged. And three, we closed outside of the value area high. So typically, that's an indication of a daytime inventory imbalance where you can expect some kind of adjustment, whether it be in the overnight or the next day. However, in this situation, the reason why I'm not really looking to short is because if the market breaks out from this inside day, there's nothing in the way of stopping this market from trading higher because when you break out, what do you get? You're into the single prints from Friday and looking to close the double distribution. Once again, because of the daytime inventory imbalance, the market could adjust in the overnight or adjust and pick up some momentum and break out to the downside. What am I trying to say? If we wake up in the morning, the market has to hold the gap. So if you get the breakout from the inside date overnight, the market has to propose and hold a gap to the upside to negate the daytime inventory imbalance. So that's what I'm looking for as far as anything to the upside. If we open up higher and proposes a gap and the market closes the gap, that basically triggers this inventory imbalance. It just shows that the market is really long and some of this stuff can be adjusted. I'm not saying that we're going to trade all the way to the lows. I am saying that we could hit the point of control. We have a couple of anomalies, as you can see, as the market traded higher. Anomaly here, anomaly there, anomaly there, anomaly here. So we have four anomalies pointing to the downside. They can be possible targets if the market decides to liquidate and adjust this daytime inventory imbalance. But it doesn't mean that you want to take a short because the market can very well gap, and we understand why the market can gap because this market 94 points on 4 billion. It wasn't a lot of volume. The volume did not support the move, and then guess what? We'll be gapping into single prints from the previous day, and you can see the volume count. Pretty light volume. So if the market gaps tomorrow morning, I would not be surprised. The key is, do we hold? Don't forget, it's still an inside day. You want to go with the breakout. Also, that doesn't mean we can't liquidate overnight and look for a potential breakout to the downside. So it's going to be tricky but very readable to trade tomorrow's market. Another thing that I want to make you aware of, someone or traders, 10,000 near the high. Don't necessarily know if those are buyers or sellers. Let me bring up my eagle eye chart. Why it sticks out to me is this is 10,000 contracts on one tick at the end of the day. 10,000 contracts. Do we got 10,000 contracts anywhere else throughout today? No. So the highest volume at one tick came at the end of the day. I wonder if they're buyers or sellers. We will find out tomorrow. Another thing I want to pay attention to, As you can see on my chart, we have the bulk sales or the bulk buys. So as we begin to look at the market today, when the market tried to sell off, you didn't see any bulk sales join that liquidation. The market rotated higher. You did not see any bulk buys supporting that rotation higher. Okay, we begin to get the bulk buys here, bulk buy here. We had some sellers, but the market didn't go lower. Are they covering? Are these folks covering? Because we also had some bulk buys here. Are they covering? Are they initiating shorts? I don't know. We shall find out. That's one thing I am paying attention to tomorrow, because you just don't see 10,000 near the highs at the end of the day being the highest volume for today, given the fact that volume was pretty light today. So it's just another print in the snow, something I'm paying attention to heading into tomorrow. So just to recap, if the market proposes a gap, it needs to hold the gap. If it doesn't hold the gap, it will. We probably will have some kind of liquidation. I'm not saying we'll trade all the way down. I'm not saying we'll hit the point of control that's pretty prominent. I'm not saying that. But there is some clues with the anomaly saying that if the market does trade down, do not be surprised, regardless of news or whatever. If the market gaps higher, don't be surprised. It's basically a go with trade if you're nimble enough to catch that trade. The market really wants to break out from this inside day. Remember the inside day, how to play it. All bets are off at the extreme of the inside day. Doesn't mean we'll hit the extreme to the up or the downside, but it's just a potential destination and or target. So you want to pay attention to value. Where's value developed? If we gap higher, you want to see continuation with one time framing higher. If we have higher value and we're one time framing lower, that's basically suspending higher value and the market's time framing lower. So tomorrow, again, can be a very tricky but readable day. You want to stick to the fundamentals of the profile, watching how value develop, not price, and it should keep you on the right side of the trade. This is Olawale Okabola with Spartacus Trading Corporation, wishing you a good day. Good night, everybody.